Welcome everyone to forum number 5. I'm Clayton Wood, co-founder of Seamlss. Also joining me is Ags from LYRA Risk Compliance. We'll send you the link after this is recorded to anyone that's registered. Keep the questions in the Q&A, drop them in. We'll get to them as quickly and as much as we can. Today is very much focused on CDD, customer due diligence. It's part of the AML framework that most firms should be working through. You might get a little bit wrong here and there, but it is quite complicated. Just theory, though. We're going to try and simplify that for you today and make it easy so that you can just get this done. We're going to cover what's actually required, how the risk rating works, and beneficial ownership along that journey. So CDD fundamentals, standard and enhanced CDD, ownership, what that means, and a bit of a look inside Seamlss, and then obviously we'll come back to some questions at the end. Ags, and I'll kick it over to Ags.
Thank you, Clayton. Hi, everyone. Good afternoon, good morning, wherever you may be. So as we continue on our journey into the world of AML, anti-money laundering and counter-terrorist financing, and let's not forget proliferation financing as well, we are now looking at customer due diligence, which is one of your core mechanisms within this entire framework. So when I've been talking about, I love these dinging noises, sorry, it does throw me off slightly. I might just put it on.
I can't hear it. You can turn it down.
I'm going to turn it down, yeah. So when we talked about the risk assessments last time, we were talking about the analogy of the risk assessment being the engine of the car. So it drives, it determines how fast your car's going to go. Well, customer due diligence is the chassis, or it's the body of the car. It's the thing that is one of the core obligation really around this entire thing that we're doing, implementing AML and CTF legislation. And the reason for that is customer due diligence is really around understanding who your customer is, who you're dealing with, and why they're coming to you. What is their actual business purpose? So it's not a one-time obligation. It continues throughout the life of your relationship with your customer. There is initial due diligence and ongoing due diligence. But the key thing that you need to understand is it comes in, there are 3 parts of it. 1 is identify, 2nd is verify, and 3 is understand. So who is the client? Are they who they say they are? And then why are they coming to you, and who actually are they? What is the nature and purpose of their relationship with you, and why they're getting the designated service through you? So you need to understand the full legal name, date of birth, address, etc. for each individual. Oh, we've got an Excel spreadsheet coming up, Clayton. Entity structure. What kind of entity structure? If it's not an individual, it's coming in. Is it a company of some sort? Is it a trust, SMSF, partnership, etc.? Who are the beneficial owners who ultimately control the company or the entity? Sorry, and like what are the layers of that ownership? Any person on whose behalf that service is received or monies might be going to, and any third parties, so authorized representatives and their authorities. You need to understand what original documents you need to collect for individuals versus information for non-individuals. So what do you need to, what documents that talk about the structures of the entities that is your customer, and you need to verify that information. So verified against government sources or against information that you get from them directly, whether it's a passport or a license, and then understand further what is the nature and purpose and risk of that relationship. It's important that the clock starts early, so you shouldn't wait to start CDD until you've got some engagement letter signed. You really should be starting your CDD process as soon as possible, and as soon as you know that your customer is coming to you, because that information that you collect will also be utilized as part of your risk assessment, which will then define whether your customer is high, medium, low, which also defines the level of information you collect, because you're going to collect more. The one thing also I would add is that within the Act, CDD is a part of the Act. So these are statutory obligations that you have. It's not just about identifying, it's about establishing beyond reasonable doubt that you understand who the person or company, or the persons behind the company are coming to you, who they are and why they're coming to you. If we go to the next slide, please. So there are 6 key matters, which are called within the Act, that need to be collected as part of customer due diligence. And the 6 matters are, which I've already alluded to on the slide before, is you need to verify the identity of your customer, which is verification for individuals, which is tools like Seamlss will absolutely help with that, because they go to the government sources, whether it's passport databases, license databases, or ASIC databases for company setups, and you need to, and those documents that you collect for your individuals are then checked back against the other databases. You need to understand that the person on whose behalf the customer receives the service, so that's any beneficial owners who's sitting within that structure, but also are there any third parties or connected parties to that individual that are going to be involved in the transaction or the designated service? Are there any other persons acting on behalf of their authority, as I've just said? Are there any beneficial owners if the customer is not an individual? And then the layers of that beneficial ownership. Are any of the beneficial owners, the customers, or any of the connected parties with that transaction, are they a PEP or a targeted sanctions match, or is there any adverse media on them? And that's a screening component. We'll talk about that on another slide. And what is the nature and purpose of that business relationship? Why are they? What are they really doing with that transaction? Do you understand what they do, why they're doing what they're doing? And in some of the designated services, of which there are 9, that answer will be quite easy to ascertain. It's probably in a very small proportion of designated services and the provision of those that is going to be more complicated. What I was going to say. Ongoing. So this is initial due diligence that you need to collect for an individual. That information that needs to be updated throughout the life of that designated services provision. So, for instance, if you're providing a registered office, that registered office is a ongoing designated service. So you will need to check that information throughout the life cycle. And by check, we'll talk about that in a moment, depending whether you're high, medium, low, you have different periodic reviews, but also when there's a trigger event. And a trigger event could be changes of information or change to the structure of your client and of any of their details, like their address changing, or they have some additional beneficial owners or additional connected parties that come into the mix that you now are aware of. So at that point in time, you need to review the information that you have and make sure that it's still valid. And you see the different types of verification information that you need by entity type on the right hand side.
And that's
Clayton,
to the
do you want
beneficial
to add
owner part.
anything here, or shall I just continue to the
No,
next?
I think that's good. And then the right hand side is talking about the beneficial owners of those different entity types as well.
And one other thing we need to say is that you can have verification standard, can be manual, can be electronic, and can be hybrid. We usually suggest you say you have both, so you have flexibility, but generally, from an electronic point of view, that's exactly what Seamlss will be able to help you with. They provide you with an electronic verification, which you already have today. This is expanding so that you now capture all your connected parties and beneficial owners. that you'll need to review, and also make sure that you're doing the same for entities, not just individuals. So if we could go to the next slide. Yeah, Debbie just said, I feel that the partnership agreement will be hard to get. Yes. However, and I know that there's been feedback from various sections of the Tranche 2 entities saying, but we're not going to be able to get this information easily, and our clients will push back. Well, your clients already have to do that for the banking sector and all of financial services. So this is really an expansion of what they do. Of not exactly what they do, but who they provide that information to. So if they're a partnership, they should absolutely have an agreement of that partnership, so you can understand the structure and who's involved in that partnership.
I think in that regard too, Ags, at the end of the day, you're an accounting firm. If someone says I don't have a partnership agreement and they need it for AML compliance reasons, as Ag said, banks, everyone else is going to need it. What an opportunity to upsell a partnership agreement.
Yeah.
Although you probably need the partnership agreement before you start the designated service.
Well, to be honest, if they don't have one, I think there is something called AI at the moment that could absolutely draw up a very easy partnership agreement for them, and they can have it checked, right? So
yeah, there'll be laws around it. It'll be fine. But
yeah.
There'll always be little ad hoc questions. Beneficial ownership.
Yes. So now enhanced due diligence. So when you have customers who you've defined as being high risk, so we talked about risk in our last session, high, medium, low risk. High risk is when you're automatically a foreign PEP, or when certain indicators take your client to a higher risk status, which means you have to check their information every year, and you have to do a little more. So the core components of extra due diligence, enhanced due diligence, that was a Freudian slip, is really around making sure that you understand in greater detail of who that customer is and why they're coming to you. So these are the 4 key areas you're going to have to do, and they kind of extrapolate to a couple of additional things. So firstly, you need to have a senior manager in the loop. You cannot just approve a client CDD without the senior manager approval. That's standard. It could be your AML compliance officer if you're a small company. If you've got one junior and then there's you as an AML compliance officer, you will need to make sure that you review the file and you say, yes, tick, I'm comfortable that that information is correct and this client is who they say that we are. Yes, you do have to verify the beneficiaries of trusts. So I'll talk about that in a moment. Actually, let's talk about that now.
We'll get through the slides.
Yeah, we'll go to the slides. So sorry, I won't read out all the questions. I'll leave that to you because I can see them. So the second is that you need to collect source of wealth and source of funds. And I've talked about that a little bit earlier, but really source of wealth is the net accumulated wealth of your client, which is business ownerships, investments, inheritance, and then you need proof of that. Source of funds is where the funds for the specific transaction originate or where there's ongoing income. So you need to verify both using independent sources such as bank accounts, audited bank statements, audited accounts, land registry records, etc. An email from your client will not suffice. Oh, hey, this was money that my mum gave me, 40 years ago. There's got to be something. There's got to be some information. There's got to be some proof of where those funds have come from.
Agreed.
You need enhanced verification beyond the standard identity checks. So where you require certified copies, where you do, your ID&V, so we call that ID&V, identification verification on your individuals and beneficial owners, you may need secondary independent data, so professional registers, corporate databases, negative media searches, where you verify any third party beneficial ownership structures to a higher degree of certainty. So on beneficial owners, beneficial ownership is where you need to go down to. So when you have a structure, an entity structure, you need to understand who the UBO is, the ultimate beneficial owner. Where you have layers, and we talked about this last time, where you have layers of entities, one within another, that creates opacity, which means there's a lack of transparency, which means you've got greater risk. And that's one of your greater risk indicators as well. So you really need to get down to that 25% ownership or greater of your entities, and that is your UBO. And where you have, with that 25% ownership is owned by an entity, you need to understand who the UBOs are of that entity. Now, it may be that you probably don't have too many clients like that, but I'm sure there are layers of trusts and potentially some partnerships where you will have to do that. And obviously, technology will help you with that. On trusts, in the conversations that I had recently with one of my clients and their leadership team, we were discussing that you may not know the percentage ownership of a lot of the trust's beneficial owners. So therefore, you'd take a risk-based approach, which means you'd go to all beneficial owners of the trust if you cannot prove that only some have a greater than 25% share. Then you need to do enhanced ongoing monitoring. So you need to increase the file review. So what that means is that what I mentioned before, for high risk, it's an annual review. So you need to check the information on an annual basis. And you'll also need to have every year, the AML compliance officer will need to sign off that all your customers who are high risk, who do require enhanced due diligence, are all, from an ongoing point of view, signed off every year. And it's usually the calendar time. So if somebody starts, if somebody was onboarded on the 5th of July this year, by 5th of July next year, you need to have checked that information to make sure that it still is accurate and makes sense.
If they've got an ongoing designated service, though.
Correct. Only there's an ongoing designated service. Correct.
So there's just some things like that where people are getting a bit confused, and there's a bit of fear-mongering going on where people are talking about you need to do enhanced due diligence, you need to monitor them ongoing every second of the day, and people are a bit worried that this is a lot of work.
No.
You need to do an enhanced CDD. You need to do CDD in general when you have an ongoing designated service. So if it's a one-off service, then that may be just a one and done kind of risk assessment. But obviously, ongoing service could be the management of their company records with ASIC. That would be an ongoing monitoring, and then you would do that every year for a high enhanced due diligence process. Is that fair to say, Ags?
Yes, correct. Yep.
So hopefully people are getting the gist of that. It's not, you don't need to do this for your whole client base.
No.
You know, at the end of the day, you might have someone that's high, but you only have to do them every now and again, not all the time. It's just when the designated service is an ongoing designated service, it's a little bit more work. But as Ag said, you just get those processes in place and get some automations in place.
It's actually so when I'm working with some clients, I draw up a customer journey for them, and within that customer journey, you know what needs to happen when. So come 1 July, all your existing clients stay as put. We'll talk about pre-commencement later, until they get a designated service, or there's something funny going on and you're thinking, I need to raise a suspicious matter report and SMR, or some of that information has changed, and then they come into your AML pipe. Then you do need to do initial due diligence and do a risk assessment, etc. Otherwise, it's only your new clients from 1 July who only get a designated service, right? So you need to be clear which of your customers are going through the AML pipe because you've provided them a designated service, versus the guys that are not on a designated service, but you're providing them services. It may be that at some point in time, all your customers in 3 to 5 years go through the AML pipe because you're starting to provide them with a different service offering.
Cool. Next slide.
Yep. So a key part of the, so just before we finish that one, I just want to just summarize people enhanced due diligence, right? It's the why, what's the transaction purpose, right? It's understanding all the third-party relationships and all the beneficial owners. It's understanding source of fund and source of wealth and the overall position of the client. So where is their money coming from? What are their liabilities? Who are they and what they do, right? That is EDD. It's that a lot more nuanced and detailed understanding. So this is a brand new thing, what is happening, because you've kind of already done ID&V to a point for a lot of your for all of your clients, if not all the beneficial owners. But this is PEPs and sanctions and adverse media screening are three quite distinct obligations, each required at onboarding and also throughout the client relationship. And that's something that technology will absolutely do for you. So
not just when onboarding for a designated service.
Yes, so this entire presentation is for people that you onboard through designated services. Yes.
I'm just trying to be clear, because there is a lot of confusion in the market. If you're just doing someone's tax return, you don't need to do all of the PEPs and sanctions. If you need to do an ID check.
Payroll. Yeah, no, that is not a designated service.
Thanks, Ag. Sorry.
No problem. So so what happens here is you've got, so this is screening that happens on behalf of you by your provider, by Seamlss technology provider. So firstly, you need to understand whether you're dealing with a politically exposed person or a PEP. A PEP is anyone who does hold or has held in the past a office within the government. It includes their family and senior associate, their family and close associates, you've got obviously domestic and international PEPs. And you also have, and so by government organizations, I also mean any international government part-owned organization. So there's a lot of people on these lists, politically exposed people. If you've got an international PEP on your list, their risk rating automatically goes to high. Do not pass go, do not collect 200. You are high, they are high, and you need to then treat them as a high-risk customer. Domestic PEPs, no, they're not automatically high, but they could be higher, and you need to look at them with closer eyes to see, do you want to potentially manually uplift, which you can always do, their risk rating to a high, to do a little bit more closer scrutiny around what they're doing.
So is that like a domestic person, like if they're on the local council, that might be a low medium, or is a local council going to be medium high still?
So all it does is adds to the overall risk rating. You're not going to be automatically high. All you need to really look at, if they're a domestic PEP or they're an associate or a family member of the PEP, you just need to look at that information that's in front of you. And this is essentially some critical judgment people need to make, right? Does this look kosher to me? Does it look okay on paper? And am I prepared to take the risk if it's going to be sitting at low or medium versus putting it at high and doing more due diligence? This is why it's called a risk-based approach, right? However, international PEPs, because of the international nature and because of a lack of jurisdictional weight that we have, Australia is a well-regulated country. We have very specific registers. So our regulators know what they know about our country. They can't always say that about others, which is why the exposure always moves up when you have an international exposure, whether it's an individual or a PEP, but also whether it's an international company. That also potentially increases your risk level, in particular those from certain jurisdictions, as we talked about last week. So what happens is you've got a person, you've got lists of PEPs. Seamlss will have lists of PEPs, and they will match those two, and then the system will, as much as possible, try to determine whether that John Smith is that John Smith on the PEPs register. And they use things like date of birth and address also to validate those matches. Sanctions is similar. It's a similar match, but it's a very different obligation. It's okay to do business with PEPs. It's not okay to do business with sanctioned entities. And sanctioned entities could be anyone. It could be an individual. It could be an organization, so it could be an entity in itself. It can also be vessels, not your problem, but something to do in the banking space. So there's lots of different things on sanctions lists. Sanctions lists are defined by the Department of Foreign Asset and Trade, and the sanctions lists, for instance, are linked to the US and the UN and other regulated, similarly regulated jurisdictions. And so thou shalt not do business with a sanctioned entity has been enshrined. It's a criminal offence. You probably 99% will not at all be exposed to this risk. However, it is part of the overall legislation because it links to terrorism financing and proliferation financing, which is around weapons of mass destruction. So sanctions lists are effectively take all these things into account. So you need to screen name of your customer against sanctions lists, and again the technology will support in making sure that the decision that John Smith is not the John Smith on the sanctioned entity. Adverse media screening is something different. It's around understanding, it's not a one-to-one match, but what it is taking information on taking the name of your customer and then putting it against databases that hold lots of different news media articles and just scanning to see whether there is any adverse media on that individual, whether it's law enforcement, whether it's regulatory action, whether it's any fraud, scams, etc. Also, I would say scan some of your providers, not this one, because I think not all providers in this space have been created equal. So adverse media is something that you need to do as part of the overall understanding of who your client is, because there may be reputational risks if somewhere further down the track they've been taken to court for something or other. It doesn't necessarily mean they're proven guilty, but you can understand some of the parameters of information that is out there for those clients.
And that's so adverse media. That's not normally done on every client when you're onboarding. That's just when you're doing the enhanced due diligence.
No, it's everyone. Everyone gets screened for PEPs, sanctions, and adverse media.
Okay.
Yep. Outsourcing is permitted, absolutely. It's very difficult to do it on your own unless you start plugging a whole lot of names into WorldCheck or one of the list providers. But this is what technology will help you with. But just because you're outsourcing doesn't mean you can point the finger if something doesn't go right. The obligation sits with you because you're the ownership of that client. You hold ownership of that client and their risk. Next. So I liked what we did last time on the thermostat. So just linking back to what CDD is required across the low, medium, and high. So you get low, medium, high. So you've got at low, when your customer comes through as low, and Seamlss will be able to help with the risk assessment for each client so that you'll know that specific data points or information that you capture on the client will then determine whether the customer is low, medium, or high. Low is standard or simplified due diligence. Simplified due diligence is something quite specific to do with regulated and in particular, government entities. So you're actually you don't need to do the entire beneficial ownership structure, but it's only for certain entities that are government. So it's just really nice to have, but really what you're doing is standard due diligence. So standard is standard identity verification, your standard beneficial ownership, you've got risk profile, and you need to review it every 3 years. Pretty much, I would say a high majority of your clients will sit there. Medium, slightly more elevated, right? The questions that have been answered, and however the risk assessment is structured, and this is what Seamlss is working with you, and obviously LYRA can help you with that as well, because a risk assessment isn't just tech, it's a statement around what you deem as high and low, and what low, medium, and high will work for you as a company, bearing and looking at your enterprise-wide risk assessment. and where you think there is risk within your cohort of clients, both existing and potential future. So this is where you've got slightly more elevated. You're still doing standard due diligence. It's not the same as low, but it's slightly more elevated. You're reviewing the information every 2 years. And for the guys that are you might be considering source of funds, source of wealth, in particular with there's PEPs, in particular with there's some international exposure to whether it's through an entity or through layers as well. Like how many layers are you looking at within your customer structure? So all of that kind of you can always decide to uplift, to a higher risk. You can just say, we actually felt that although we came out low, this client, we're going to put him at medium and it's going to be reviewed every 2 years. Or we're medium, actually, we're not quite comfortable with waiting every 2 years. We'd like to check every year. So you can always go above your risk rating, but you can never go below because you've determined that methodology, and that methodology is is your baseline.
Yep.
And then obviously you've got high, and we just talked about what is required for a high risk. Pre-commencement customers, I haven't got a slide on that, as we've just talked about. They are at the moment not captured until you provide the designated service to them. They're suspicious matter, or there is or there's a change in their details, and then they kick into your into the AML pipe.
And I think accounting firms are usually pretty good at justifying risk and seeing and assessing risk on a regular basis to notice whether you need to move someone up. Like if there was an inkling of an idea, you might just move them up. Better to be on the safe side.
Yeah, absolutely. And actually, I think I lied because I do have a pre-com slide next. I've forgotten which slides I put in. So look here. So sorry about that. So for pre-commencement, as I've just said, they're staying as they are. If you don't provide a designated service, they're not going into a pipe. However, if you do have a new designated service, or there's something suspicious, or there is any beneficial ownership change, or any other information about that client changes, then you do put them through the risk assessment, and then you do put them through due diligence. Long-standing, so your highest risk scenarios are effectively long-standing clients. You've known them for a long time, but they've never been formally verified, or a part of their structure has been verified, but not all of it. Or you've got business ownership changes that you just weren't aware of. Or obviously there's instructions expanded to update their services to now provide a designated service. And I think the key thing is don't assume familiarity equals compliance, because quite a few, there have absolutely been instances overseas in the UK where and New Zealand where this has happened.
I think it's just being aware of when those designated services are triggered, or when something seems a bit odd. Use your spidey senses to work it out.
Absolutely.
And I think this is where a lot of firms will struggle with that 25%. There's already asking questions about beneficiaries. I'd love to see if we can get a bit closer on that. Yeah. Did you want to talk into this one, Ags, or do you want me to?
You go, and I'll.
I think like the biggest thing that a lot of firms do, much like me, you'll onboard a company and they'll have one main director or person that handles all the stuff, and they're the person you're going to do most of the interaction with. But unfortunately, there might be 4 shareholders at 25%. So you need to do CDD on all of them. So if there's no one decision maker or control, then you need to identify who might be done on the CDD. Maybe there's other holding companies or structures, and you need to trace back to those individuals to see who is the controlling beneficial owner. Maybe they've got multiple roles, or their role is dictated by their job that would dictate that they have that control over the entity. Is that fair to say in regards to companies, Ags?
Yeah. So you have to have, either 25%. So 25% is the ownership threshold. So
Ownership or control.
Or control. Exactly. It doesn't have to be and, it's an or. If there is somebody else who exercises control of the entity, but is not necessarily a beneficial owner, and they hold a particular position within that company, because then they can execute the direction that company, that entity goes, they need to be fully identified.
Yeah.
And verified. Yeah.
And the trustee of a discretionary trust, they may not own the trust assets, but they definitely control them. And that's what makes them the beneficial owner under the legislation. So they have to be checked. So, obviously looking at ASIC, extracts, things like that to identify who the 25% owners are, looking at the trustees to see who the trustees are, who the settler, the appointer are, so that they are the ones that have control. I don't think the settler really has any control, but apparently we're going to have to maybe look at them as well for some reason. But the settler doesn't have any ability to appoint anyone, but the appointer definitely does.
They're a connected party. So I use a kind of an umbrella term, or I used to before I was in Australia, is connected parties. Who are the connected parties or individuals to that account, of which you can absolutely have either beneficial ownership or control?
Yeah, and
third parties.
This is the pushback I'll have on it, because from a legal standpoint, the settler has no control. So I know that banks in the past have done CDD on settlers because I've seen it. But at the end of the day, it's the appointer that appoints things. The settlers settled the trust and then they've gone away. And sometimes the settler is someone at ACIS or something. So it's going to be very interesting coming around the settler from the AUSTRAC point of view. I'm going to see interested to see how that goes. But I do know that I've seen a lot of settlers need to do CDD. I think that's going to be very difficult for a lot of circumstances because they have no control. So I think it comes back to that control and ownership, and that'll be interesting to be assessing a settler if they're not associated with the trust anymore.
Well, you're not assessing them; you're just IDing them. That's all.
But sometimes you don't even know who they are, or the trust person won't know who they are. So that's why I'm suggesting it'll be difficult. Now, someone did ask about the beneficiaries. So I think at the end of the day, is the beneficiary going to receive a large amount? If there is 100 beneficiaries, you don't need to CDD 100 beneficiaries. You need to CDD the ones that are getting most of the money or have some sort of control over it. Definitely, if you're seeing someone getting a lot of the money from the trust, they're the ones you're going to be doing. I've seen different positions on this. Some people are saying, no, you would have to check all 100 beneficiaries, but I think it just comes back to that beneficial ownership of 25% and control. Is that fair to say, Ags? Like someone that gets 1% of a trust probably doesn't have much control over that trust unless they're the trustee.
Well, no, but this is where the 25% threshold applies, right? So it's 25% threshold and above. You do not need to go below. However, on trust, you may take a risk-based approach, and it all depends what you define in your risk assessment, because risk assessments generally come in two forms. They are a document or a statement with what your risk appetite is and how you are going to be implementing that risk appetite, and then a methodology or a technical solution that then gets you to that. So you will need to define that yourself, depending on how you know, or depending on who your clients are that you understand. And you can always change it later, right? It's not a static document. So I think it depends, Clayton, on the risk profile that each of your everyone here, or accountants and all the tranche entities, feel they have with their customers.
Yep. And I think that's the whole thing.
Which is hard. I get that.
It's always going to be risk-based. What risk did you look at for who you're trying to identify and do the CDD on, and how low was it? Because at the end of the day, like I said, if the settler is some random person not attached to the trust at all, it's pretty low.
I'll have a little dig around on the settlers.
It's a tricky one, and I'd love for people to comment in the comments, because I think there's a few people that agree with me that the settler on the trust from the year 2000 that was old mate that set it up as a lawyer that's no longer in existence or died, how are you going to do any CDD on them? It's not possible. Like, this is the one thing where I've seen some documents where it says you need to check all these people, and I'm like, well, some of those people just probably don't even exist. So I don't think it's a tick box approach to every single thing. It's risk, it's control, it's ownership, it's all of those things, and that's a part of your process that you're going to implement. And that's the thing, like the complexity of some structures and the layers to these trusts and companies might indicate a higher risk. Like if you're finding it harder to figure out who has the beneficial ownership and control, it's probably going to be a little bit more work for you and the team. There you go. So someone else said is to settle sums above $10,000. I don't think I've ever seen a trust settled for over $10, unless it was a unit trust. But anyway, I think that's the key. At the end of the day, you're talking about value. I just think it comes back to that risk control, and beneficial ownership. You need to be aware on what that process looks like for you and your firm. So existing customers, we've touched on it a little bit today. This is probably the single most just key point. You don't have to do it on your whole client base. No, not now, not immediately. When your clients trigger a designated service, that's when it's going to happen. And that's when you do the CDD. And then even on your current client base for the ASIC register, I think that's probably the most common one. I was talking to Ags about it. And so you're going to have to add those people into your thing. But as Ags noted before, unless they're a high, most people that are on your registered office are probably going to be low, and you only need to check them every 3 years.
Unless something suspicious turns up, or there's a trigger, or you might screen, because the screening will be ongoing in the background, right?
Exactly.
So screening is whenever you have a change to list, your people that are sitting on your AML pipe going through ongoing, they will be screened against the PEPs and sanctions list, right? So if you're providing a designated service, it may be that at some point in time there's a kick out from screening, and Seamlss will go, actually, you've got, a PEP now, or this person's a PEP, or someone's on a sanctions list. That's when you're going to be, yes, it will be. And plus in 2029, there'll be travel rule there'll be some additional requirements coming in as well on the IVTs, international value transfers, and travel rule requirements, which we haven't discussed because there's something we don't need to worry about it right now. But yes, it may be that there is some additional work that you need to get done, which the technology will help you with.
And I think that the other thing I was talking to Ags about with the ongoing, and that's why I keep talking about the ongoing compliance, because I've seen a lot of stuff about the ongoing point of view. And my position is that a lot of the designated services are one-off transactions. You're going to set up a company, unless you add them, if you're not adding them to your corporate office, registered office, it's not ongoing. It's one transaction. It doesn't mean you have to keep doing something. Like some of these things are just one-off transactional appointments. That means you do the CDD or enhanced CDD, depending on the risk and all that sort of stuff. It doesn't mean you have to do ongoing. There's a lot of people that just think it's just one. I have to keep doing more and more work. It's when you do the workflow, then that's when you're going to do the outcome, and that's where Seamlss is going to come in. So, we're going to add that as a part of the ongoing request structure, that you'll be able to do ID, PEP, sanction screening, and tests, and we'll be putting that in there. So it was supposed to be in this week. Had a few hiccups, but it's not very far away. It's very much nearly there, ready to go. This will obviously check all the different things that you need to check in regards to your CDD inside Seamlss. And I'll do a webinar as soon as that's live, and I'll be pushing that out more and more in the coming weeks. And I'll be working with Ags in the coming weeks to go over more of this stuff in regards to what Seamlss is bringing out and building on top of that. I'm going to go back through all of our questions here, Ags. So, doing initial CDD on all clients we on board. Well, that's a no. So you're only doing it on designated services. So, I mean, while you could trigger it for all clients as a part of your IDV and your biometric checks when you're doing it with Seamlss, I think it's probably not required. Just do it on the ones when you're going to do a designated service. Someone asked about partnerships, which you mentioned earlier, Ags. I think that's just going to come back to those one-off cases, finding what you will lean back on. Verifying the beneficiaries, we've also talked about that. The beneficiaries could be parents, grandparents, and children, but it still comes back to that risk-based approach that we talked about. Beneficial ownership, control. Will we need to verify beneficial owners of shares within a company that are held by a trust or a company or non-beneficially held? Talking about the trustee of a trust, I think there, Joey. So I think it depends on who's doing the designated service as to what you would trigger. So if the trust was doing something and there was a trustee and they were the directors of the trust and the trustee, then they have control. So therefore you would have to do CDD. Is that fair to say, Ags? Makes sense, sort of?
Yeah, sorry. I was just looking at the question. What was the actual question? I couldn't find it.
So if there's shares in I'm assuming it's a shares of a trust of a trustee company. So the trustee has control over the trust. Therefore, they are the shareholder. They are the directors. They hold the control. Therefore, there's a CDD to be completed.
Absolutely. Yeah.
In regards to that transaction.
Yeah.
Can we start sending letters, form requests for banks verification, much like they've been sending to accountants? Well, Debbie, that's what Seamlss would come in and use tools like that. If you want to do it manually, you could use the AUSTRAC stuff to do it manually, and that's sort of what you're doing with the banks and how they're sending it out. Where is the point in time that being a registered office, do we need to re-sign off on that annually or annual cancel? Yeah, so once you do I think the trigger for that for ASIC would be when you do the renewal, start doing the checks, do your CDD, and then turn it into an ongoing process for every year for your annual review. Will Seamlss assist with this? Yes, we were going to do some things to assist. When doing CDD annually, is it just a risk assessment component, not ID verification? I think depending on the outcome, you may have to do an ID as well. Ags, is that fair to say?
Sorry, what was the question?
So if someone did a designated service and you're going to do CDD, would an ID check form a part of that sometimes?
Of EDD?
CDD.
Yeah. So ID checks are on all your clients and the beneficial owners always.
And so if I did a designated, so if I've ID'd Ags last year, Ags comes to me in 3 months' time and says, I want to set up a new company. Do I need to do PEPs and sanction checks, or do I need to do an ID check as well?
So you will need to check whether my information has changed. If it hasn't changed, the information stands. And if it has changed, you will need to redo the CDD if I've come back in 3 months later. Yeah.
Assuming
but
CDD
sanction screening will be done anyway because you're checking changes in lists against the entire client basis.
Yeah, PEPs and sanctions tick, yes, but it's just the IDV part.
If the information hasn't changed, no, you do not need to redo it. Only if the information has changed.
Cool. Assuming CDD will only need to be redo if the identity docs expire. Well, we're not holding
That's what the tech.
You're not required to hold identity documents, so you shouldn't know whether they expire or not.
So that is part of a tech solution. Like you firstly, you check them at one certain point in time, then there are high, medium, low. So you check them in 1, 2, and 3 years, right? And at that point in time, if there is additional verification required, it will be done at that point in time because you do it on your periodic cycles.
Debbie asked an interesting one. She's just curious to know if overseas versions of this are more intense than Australia. Look,
the same.
They're much the same. Based on my discussions with New Zealand firms, theirs is more messy. Ours has been rolled out. We've been given the AUSTRAC guidelines, which is more than most countries get. I feel like we're getting a very stepped approach to it. When I talk to the New Zealand people, it's so confusing. They've all got a different interpretation of what is to be done and what needs to be done. It's amazing how different they all take a different approach to it, whereas ours seems to be very structured. So I think we've done well. I know it's a lot more work, but in talking to other people, I don't know, it just seems like theirs
we've certainly had 22 years.
Right?
The UK was live in 2004 and New Zealand in 2019. So, I think what they've done now, they've learnt the lessons, the regulators, and they've tried to clarify it because exactly for this reason, there's been confusion. There's also there's also the Act and the rules, right? There's Act and rules and guidances, which are the kits. The Act, whatever is in the Act, that is your statutory requirement, right? That's your criminal offences, etc. The rules, the guidance. So interestingly, the Act doesn't say high, medium, low. The Act says risk-based. So there is still confusion, I would say, within the legislation. The UK is probably the clearest. However, they've done it, they've tried to, they've gone down a path to simplify the legislation. Yeah.
Someone's asked about whether the client went to jail, whether that would form high risk. I don't know that jail forms a part of the CDD, but I think it.
Oh, do you mean through the adverse media searches?
PEPs and sanctions? I'm not sure. So
I think you just need to decide reputationally and what they went to jail for, whether you'd want to continue providing a service.
Was it a anti-money laundering, terrorism financing reason?
Yeah.
PEPs checks are Google searches or public registers enough. That's kind of what happens now. That's what AUSTRAC says, 3 pages of Google. I don't know how you're going to do that, but anyway. Do clients know if they are a PEP or expected to know? They'll be on the register, Ags, is that right?
Yes. So what you're doing is once you've got technology and you've got your client name, the technology will match it against the correct PEPs list. So Clayton and the Seamlss team are doing everything they can to understand, they will know which PEPs lists and which sanctions lists are the ones we need to have in Australia for the Tranche 2 cohort, and they will make sure that the matching is done correctly, and any kickouts from that matching where it's unclear what is done to provide you with all the information you need to make a decision, whether that client is on the list, whether it's that PEP or sanctioned individual.
So if there's a Clayton Wood in Perth and not in Albury and you're on the list, you're probably going to say it's not the same Clayton Wood.
Correct. The address and date of birth are a key part of, being the delineating parts of the information. Yeah.
Simone's asked about ITR clients. ITR clients are not a designated service. You can move on from that. You don't need to do them. When you do a designated service, that's when you do a check. What happens when clients downsizes or changes structure? Can they go from medium to low? Ags discussed that. Yes, you would just do another risk-based assessment to see where they sit. So that's just a part of your process. When something changes, you do your risk assessment and whether it could go up or it could go down. Existing company with a PTY Ltd, annual ASIC resume, does it trigger CDD on them? Yes. Since they're an existing client, it's always been receiving that service. It doesn't trigger CDD. No, the legislation says office holders are in and we need to do CDD on any registered office person through ASIC. Yay, us. Establishing a trust with a new client. We only do CDD for the individual that comes to us, and then we need to look at all the beneficial owners. I think it'll come down to what you set up with that one, Atomic Business Advisors. I don't know who it is. But I think the key with that, Ags, if Clayton comes to you and says, I want to set up a new trust, it would come back to who is on the trust, who is the appointer, settler, and beneficiaries, like who had the control and ownership over the trust and or company. Is that fair to say?
Yep. Yep.
What is the babies? What about babies that become beneficiaries of trust? Again, what's their level of control?
Yeah.
0. What happens if someone passes away and we can't identify them? Well, and then they fall to IDing their LRP.
What's LRP, sorry?
I don't know. I assume it's the person, like the person that's in control.
Legal representative, yeah? Is that it's like a...
Yeah, so I think at the end of the day, if someone passes away, you're IDing the entity's controller. So whether it's the trust, whether it's the person's estate or whatever, if there's someone in control and there's a designated service, then that's the person, the control person is the person you're going to have the risk assessment and stuff done on, who has control and ownership. Busy June 2029, could be quite busy. Possibly. Can you explain software offering? Yeah, we did that. Does acting ASIC registered officers designated service? Yes. Thank you. You're welcome. Touch Lyra. Oh, that's Ags. Put that in there. Thank you, Ags. Click on the jot form to get started.
Yeah.
Sorry. Still existing one, low risk. When creating a PTY Ltd company is a one-off, but the client's existing one and low risk. So if the client, so if I set up a company, that would trigger the risk assessment and the CDD. Once they go on to the registered office, that CDD would continue. If they are not your if you are not the registered office, then the CDD would not continue, and you wouldn't have.
It's a one-off. It's a one-off setup.
Yes.
It's a one-off fee. You just need to understand what is the purpose of that, and you do initial due diligence, and then that's the end. They're not an ongoing customer. Yeah.
Someone asked if Seamlss will help register them with AUSTRAC. That's not something the software will do. Is that fair to say, Ags?
No, we can. I mean, yeah. Look, it's not a lengthy process. I'm helping some other clients sort that out. So if they wanted to have some help, we could do that. But it's not overly taxing. It's just really understanding how you operate and your broad offering.
Appreciate it. Legal personal representative. Sorry.
Yes.
Yeah. So again, the legal personal representative would be the controlling person. They are the risk person. They are the people you're going to check. If a client uses us to set up an entity, but we are not the registered office, then we are not providing a designated service. You are providing designated service because you are setting up the entity. So you still need to do CDD. Lee's asked this. So yes, you will. You are setting up an entity that is a designated service. That's going to trigger your risk assessment and checks, but the ongoing CDD is not required. So yeah, this is what I'm talking about. When you're doing a designated service, doesn't mean it's ongoing checks. Right. Taryn, people are still asking about being a registered office holders. So when we are the accounting firm, I have a number of companies on my ongoing ASIC office holding checks, AGS, and that's the ongoing annual renewal. I think there's a lot around what we've covered. I'd love to get some feedback in the comments. I feel like maybe we do some pipe testing on the next webinar. So actually go through some designated service, some common services, and what that could look like on a regular basis. Like, especially the registered office holder, what that looks like for the ongoing purposes of most accounting firms, because that seems to be the number one thing that we're all going to be doing and stressing about. And then maybe, if someone comes in and sets up a structure, and then I just feel like there's probably 2 or 3 common designated services that maybe we could go through. Ags, are you happy with that with the next one?
Yeah, absolutely.
I feel like
and look, I was just looking at the act. So yeah, so in terms of CDDing the dead, we don't see the dead as exactly as Clayton said.
They've lost control.
It's the estate. Yeah, they are no longer in control. They're somewhere else. Hopefully a much nicer place. So it's about who is the customer. So who is the estate of the deceased? So you need to understand who is then controlling the money and obtaining the money in that flow.
Agent versus registered. Concord. Registered agent versus registered office. Registered tax agents, that's got nothing to do with AUSTRAC. They are talking about the registered office of a company. Being the registered address is different to being the ASIC agent. Yeah, right. That'll be an interesting, fun one. I like that, Simone. Good job. So I think that's one where I reckon the next webinar we go on a couple of the pipeline. We have covered a fair bit in our AML webinars. Appreciate all your time, Ags. I love it. I think everybody else on here does. I'm sure everyone wants them to keep coming. We've done a lot. Just overall, we've done risk assessments. We did designated services. Today we've done CDD. What's next? What am I missing? Is that a good one?
We did an overall obligations one.
Yep.
We went through everything.
I feel like we've covered a lot over these sessions.
We've covered a lot. We haven't done reporting. We haven't done reporting in detail. Record keeping, but reporting. But it's not. You don't need to spend that long on it, to be honest.
But I feel like that's probably something we could do in June, like later. Like I feel like people are really worried about
training. Yes.
The triggers. Yeah. The triggers is probably the key part. What's going to trigger it, and I think that's what people want to see is I do a designated service. What does that look like in real world?
Yeah, I think the process flow is the key, because you understand how the designated services operate within the obligations and what the actual flow looks like for you and your customers. So yeah.
Appreciate it. If everyone's happy with that, give me a thumbs up or say yes in the comments. It's 1 o'clock, so we'll wrap it up. Appreciate it. I really think that, yeah, doing the pipe and seeing how it all works through the flow and what's a yes and what's a no, what's a low, what's a high, I think that'll be really good. Appreciate all the feedback. Love that everyone's enjoying these sessions and getting much out of it. By all means, click on that link. I'll send out a link for Ags to connect with Ags to get her to assist with you and your AML compliance programs. That's rolling out now more than ever. Obviously, hit me up if you need Seamlss. If you're not using Seamlss, come see us. There will be more AML and demos coming out in the next couple of weeks, because we've got some big changes rolling out in Seamlss in regards to AML and syncing and things. Really looking forward to that. Appreciate everyone's time. Thank you so much. Yes, we'll show you how it all works with Seamlss Luke as well. This will be a part of the next session. I feel will be really good to go through it. Thanks, Ags.
Thank you, Clayton. Thanks, everyone. Have a great afternoon, and absolutely get in touch if you have any questions. We are here to help.
Excellent.
See you later.
Thanks, everyone. See you.
See you. Bye.